methods in management accounting, and these methods are also used and tested across all other units. And you can get notes from educationchess.com, where you can videos for free to some extent, and you'll also be required to do well in your examination. There is very many questions and answers there that you can study and get well with your studies in each and every topic that you'll be encountering. Now, in this lesson, we are looking at cost estimation methods, whereby it's important as a student to know very well that these cost estimation methods are tested in different units, not only in management accounting. They are concepts that are tested. They are concepts that you should know, and they are also used in field work. They are used in your areas of professions. As accountants, you need these concepts to know how to estimate costs. During budgeting, you'll also be required to have this knowledge and understand also, one, the reasons for cost estimation. Why do you need to estimate costs? Why do you need to know the cost? Why do you need to investigate costs that had been incurred? We will look at types of costs, which really include variable cost and fixed costs, but we will check that one in deep details. We will also check and know how to classify costs during the estimation, either to fixed or all variable cost. What category? How do you view all the activities and check whether this is variable cost or fixed cost? Methods of cost estimation, we have said that we'll look at different methods that are used in estimating costs. And first, we'll look at, in this class, the estimation of costs by account analysis. We analyze different types of accounts provided from the financial reports. We classify all those costs into either variable or fixed costs, because we need to derive a certain formula, that's linear equation formula, and then from there we estimate cost for each variable, either fixed, average, variable cost, or each component of variable cost. We'll also check in details cost estimation by regression method. This one gives students a lot of problems because it pertains a lot of units and it's tricky. But this time around, we'll see regression methods from simple regression to complex regression method. We'll also be able to look at another method of cost estimation, which is ILO method. This is very simple but always tested. It's a very important concept which needs to be understood by students across all units. We'll also check and understand the potential problems which comes with the regression method of cost estimation in management accounting, and also financial modeling and forecasting. We'll have a chance to know the assumptions that are used in cost behaviors and estimation, which are very important. And now let's go further in this class to look at the types of costs and the cost analysis, account analysis, estimation method. Most importantly, you need to understand the reasons for cost estimation in accounting. Now, understanding the reasons for cost estimation, as a student, you need to know some important information about cost estimation methods and why it is important for you as a manager in any organization. One, it helps company management to make informed decisions that are very accurate to cost decision. Costs, cost in companies, cost in any organization is critical. It's critical. Company can get closed immediately after being formed because of poor cost management. If it is production cost, all personnel cost need to be checked and to be budgeted so that you can be having a benchmark on how you are going to run the organization. As an accountant, you'll be performing some budgeting, yearly budgeting, and also weekly, monthly budgeting, financial period budgeting, and you'll also look at costs involved in every project that you are taking in that organization. So cost tricks and cost methods, estimation methods will inform you what is happening on the ground, on operation, and personnel cost, depreciation, what types of movements going on there through cost estimation methods during budgeting. You prepare yourself very well, just like that. And also when you're performing project appraisal, it's very important for you to know that it will help you so much. It helps management to make cost comparison in different areas of investments. For example, cost incurred in production and cost incurred in advertising in the products outside there. So you compare the costs, and also you can also compare the cost between your production. For example, farms in same industry, you can get a financial statement of the other farm. For example, you are selling food industry, you'll go, or you're selling clothes industry, your textile industry, both of you can compare the cost being used in each or each of the company. Then from there, you end up understanding why you're incurring high cost or low cost, what you're doing this, that. So it's only through cost estimation methods that you're going to have that. Another thing that it helps management in assessing the costs and benefits among investments and alternatives, and also gives the management in organization the right actions to be undertaken while making decisions. These are very important points for understanding the reasons why we have estimations of cost. It's very important. I want to bring you to another step of types of costs and the basic cost behaviors and patterns that occur. You find that costs are divided into two. We have fixed costs, and variable costs. We know that fixed costs remains constant as activity changes because they are fixed. They don't change. If even an activity in the production, in operation changes, the fixed costs remain the same. But while variable costs changes with the changes in the activity, they go hand in hand. It's very important for you to know that, and it's very simple for you to understand, and grasp it to your understanding. And when explaining, you explain very well, because sometimes you'll be asked to differentiate between fixed costs and variable costs for the knowledge of identifying and classifying costs to the way it's supposed to be. Three important methods in cost estimation method, and you are supposed to understand them very well because they will be tested in your examination, and they are so important for you. Now, they include the account analysis, regression method, and halo method. And we will start with account analysis, as I said, and we'll present it in an Excel. This is very important for you.
Cost estimation method. In this, we are looking at the account analysis. It is simply an examination of accounting records and information that are obtained from accounting reports and statements. To use this method, we review all the accounts information and details that are extracted from each account in an organization, and each account that is contributing to the total result and costs being analyzed. So when we are provided with information, for example, trail balance or profit and loss account, we go deep into each account and classify this account into different accounts, each as either fixed cost or variable cost. We use actually an accounting classification of judgments. You, as an accountant or as a cost controller, you are the one responsible to make a judgment of, or a student, you are supposed to make a judgment as whether this activity is in line with variation or varies with the cost varies or does not vary. How is the cost charged? Is it the same all through? You are supposed to know about that one. So it's very
various costs, classes of accounts provided by you, by your accountants, to you as a cost accountant. You will review all these ones. For example, in account analysis example, you've been provided with a company that has been in operation for the last 4 years, and these are accounts that you've been provided with, which you will use now. All these it's for you to use in classifying each each cost. For example, this is direct, indirect material cost, labor costs, IFRS lease costs, we have electricity, we have machine service, we have plant and equipment, insurance, and depreciation. Now, in these ones, you'll be able to, excuse me, to classify them into either costs or variable costs or fixed costs. Now, you find that you've been provided with below accounts obtained from books of accounts of company X, Y, and Z. These accounts give the information of cost incurred in the company for the last 4 years. So all these costs you can see here. All these costs you can see here from the last 4 years, these values. So time given is 4 years. 4 years. So all these one you will be able to look at them very well in calculation of the there is also additional information. You are given here: direct labor hours that were used for the last 4 years, direct labor costs, machine hours, and units produced within that one. That 4 years, which is 19,427 this is very important for you, and we'll look into how to solve this issue in. So let's go to an Excel and we start solving this problem using accounts analysis, an example of cost estimation method.
I want to share with you cost estimation methods, a class that I've been looking after, and we want to introduce this cost estimation method, that is account analysis method. How do we use account analysis method to derive costs and investigate what had happened in the account information that been given from a company? Companies' transactions show the activities that have been going on, and once we classify each and every account to its cost component, we are able to derive a cost estimation formula using linear formulas, and then we get to know actual cost that has been incurred per unit. Now, this class, we will look into the account analysis method using an example. For example, for the last 4 years, you've been provided with financial information or account information of company XYZ Limited, which includes indirect material costs, which is 26,627, labor costs, IFRS 16 lease costs, electricity costs, office maintenance services costs, plants and equipment costs, insurance cost and depreciation, which total amount to 200,516. You have also been provided with additional information, and because we are also learning more about Excel, I'll also show you how to freeze this Excel so that we will not be seeing our headline disappearing or being hidden on from top when we scroll down. So to freeze this Excel, what you can do is to inform the software, that is Excel, Microsoft Excel, that you want to be viewing the first 4 rows constantly. They should not move as the others move. So you'll go to view. When you go to view, you'll see freeze panes. Freeze panes, click freeze panes and click freeze panes. Now you can see when you move these rows, the first 4 rows are not freezing, are not moving because they have been freezed, they're not moving, but the rest of Excels are freezing. Okay, now additional information given here from the accounts office, you find that there is the labor hours indicated there. There is also direct labor costs, or else we can say this is direct labor hours. This is the cost of the direct labor hours and machine hours and units produced within those 4 years. Now, let's format this one. We can format it to general, or we can put it to be number, and then we remove the 0 like this. Boom, boom. Then that's okay. Then the question is, what is the yearly average fixed costs? Fixed costs. And number 2, what is the yearly average for variable cost per unit for each of labor, direct labor, um, machine hours, and units produced in the company, the company or production department, that's okay. It's okay. So we want to solve this question using account analysis method. Now, the first step that you should do is to categorize this or classify, let's say, classification, accounts, categorization. You categorize as fixed costs and variable cost. Fixed cost and variable costs. Indirect material is variable cost, costs, variable cost, that is VC. Let's say VC. Indirect labor is variable costs. IFRS 16 lease costs. These are fixed costs. These are fixed costs. You can say this VC, this is fixed costs. Electricity is also electricity costs is also fixed costs. Electricity is also fixed costs. Machine services is variable costs. With plant maintenance, it's maintained as per the contract or within specific periods. So, and the cost may be fixed. The other one is insurance. Insurance is fixed. You are paying insurance for your company or whatever, even if it's vehicle insurance, it's fixed amount because it's determined and agreed with insurance companies. Depreciation is fixed. It's also fixed costs. Depreciation. So this is fixed costs. This is fixed costs. This is variable costs. This is fixed cost. This is fixed cost. Depreciation, fixed costs. Just for abbreviations. This is important because now you'll use it to obtain the best category. Now, from there, or we can say we delete that one, or we can use this one. We can take this fixed cost and variable cost, we put it there, and then we delete this one, just to utilize the page very well. Now, from this point, we have already categorized all these accounts into two, because we know total costs is equals fixed costs plus variable costs. Fixed cost plus variable costs. So from here, we can get the total of each here, and we use a Excel formula that is equals sum if in this range, F4 to lock in that space, and to tell the Excel, as you move the formula, we want to use only that space. The selected cell should not move, comma, sum if variable costs, get the sum here, up to there. You highlight that part, hit F4 to lock the whole space, and click enter. So variable costs incurred is 88,281. And then you can copy this one, or you can use is equals sum if tab sum range. This is the range. If in this one F4 fixed cost, comma, then give me the sum range here. Hit F4 to tell the Excel not to move as you move the formula. So thereby obtaining the total costs for each as that's total costs. Total costs are here with us now. Oh, we need to, yeah. So this is beautiful, just like that. Then from there, we have now obtained our categorized cost into variable and fixed cost, and also total cost. All right. Now from here, we will solve our problem now. The first question asked is, what is the yearly average fixed costs? Yearly average fixed costs. Let's put it here. Yes, what is yearly average fixed costs? Yearly average fixed costs. So you can copy this one, average fixed cost. So this fixed costs, copy this one and put it here. This is amount, time span, cost are incurred within specific time, they're affected with time, and then average fixed costs, So here time is 4 years, and what is average time cost is equals total fixed cost divided by duration yearly. Is equals total fixed cost divided by number of years time. So this is now your average fixed costs. Average fixed costs is obtained just like that. All right. Now, the other question is we will solve what is the yearly average variable cost per unit for each of the following: direct labor, machine hours, and units produced in the production department. What we are going to do here, we will copy this and put it in our solution panel, enter. And then we need to push this one down. We can push it like that one. So click Control plus, shift the cells down, enter. So you have shifted them down, right? So direct labor. Now, variable cost is affected by the direct labor hours. We want to know out of direct labor hours rendered, the unit per direct labor hour worked. So we will copy this variable cost here. Variable cost, this is amount, a direct labor hour, direct labor hour worked, and then it was 4 years, the work is equals direct labor hours. So average, yearly average, yearly average, yearly average direct labor hour as variable cost divided by direct labor hour. So this is cost per hour, cost per units of direct labor hours that have been offered. So we need to move this one up here, and then we can solve as well. So what about machine hours? Machine hours. Bring this one here, machine hours. LH, so this is now M, machine hours. Sorry, machine hour, and also direct machine hour. Machine hour. So we can copy also this one, direct, that is variable cost, total variable cost incurred, put it there. How many hours direct machine hours were used? Machine ran for 13,827 hours. So for those 4 years, number of total hours is this. So divide by yearly machine hour average, that is total variable cost divided by machine hour, you get 6. All right. Then units produced in the production department. Units produced in the production department, we can copy like this. Then we need to freeze this. We need to freeze this. So freeze so that it not move. So variable cost is 88,281. This is the amount. This is the amount. Then from there we'll have direct units produced, units UPD by units produced, then UP, units produced. How many units produced is equals to total number of units in those 4 hours. We assume this was 4 hours, 4 years, that is, sorry. So then we get the total units produced, total cost per unit, this. So from here, we will get total variable costs. So the total variable costs units yes is equals sum of cost per unit for labor costs, machine hours costs, and units produced per unit. So you have 18.68, and you make it red because we're going to use it. This is total variable cost per unit for those 4 years. Right? That's how we come up with variable cost per unit. So the equation, we have to write the equation, linear equation for the production, which is supposed to be total costs is equals fixed costs plus variable costs. which is written as linear cost equation is equals y is equals mx plus c, or that is mx plus c. So for this time, we know fixed cost is for the 4 years is 20,058.75 US dollars, and then we have to write y is equals 18.65x units plus 28,058.75 is our equation for this account analysis. We have to put it on top there is the answer, is our answer. It's good. It's good now. We have achieved the equation here and we have to put it there. So this means that the total cost required to run the company, total fixed cost required to run this company for the 4 years is 20,058.75, but for every unit produced, it consumes 18 dollars, $18.65. So why total costs? So here we can say whereby y is equals total costs of production, total cost of production then x is equals units then 28,058.75 is equals fixed costs. And that's how account analysis, cost estimation using account analysis is done. Now from this equation here, we can obtain any from the above equation. We can obtain any costs incurred. We can obtain any cost incurred in the production process. So this is how we solve such important question in cost estimation using accounts analysis method. Thank you very much, and like my YouTube channel, and you will enjoy more of such products that will be coming to show you as time goes by, including the other cost estimation methods, which includes high-low methods and regression method. Thank you. Bye-bye. And did you know that Education Chair's website is open for all students to post questions for free and share to the world? Now we are bringing you a platform where you will be able to exchange questions and get answers from your fellow peers, meet new peers around the world, and this is for you as a student. And when you open the account, you go to www.educationchess.com, where you find the students' academic forum and academic community. You can share for free your assignments, your questions with answers, and also make a living from there, and also make sure you met new peers from there all over the world. There's also cheerful lecturers there, teachers with a lot of knowledge. Yeah, join today by creating the account. Please don't fail to subscribe to our channel and be blessed. Click the thumbs up